Sir, very happy afternoon to all. Sir, we have completed the chapter cost of capital. In that chapter, we have learned how to find out the KD, how to find out the KP, how to find out the KE, how to find out the KR, put together how to find out the KO. That is WACC, weighted average cost of capital. We will be doing the first practical question of ICAI book back. Gamma limited as 5 lakh. This is not rupees, this is in amount, 5 lakh. Rupees 1 ordinary shares whose current ex-dividend market price is 1.5 per share. That means MPS0 is equal to 1.5 per share. So if you want to purchase one share of this company, you have to invest 1.5. The company has just paid, that means recently, a dividend of 27 paise per share. That means this is DPS0 because this is not the data which they are going to pay, which the company already paid. And dividend are expected to continue at this level for some time. That means till what time they have not mentioned. But for immediate coming year or years, it is going to be 27 paise only. So what they are saying indirectly is DPS 0 will be equal to DPS 1 and don't expect a growth immediately. If the company has no debt capital, that is in the capital structure, if the company does not have debt, that means Gamma Limited is a all equity company. Gamma Limited is a compute the WACC, weighted average cost of capital. Generally, my dear lovable students, we will find out the WACC using table method. Like we will put the number 1, 2, 3. We will put the source, like what are the sources of fund. Our sources of fund generally will be equity. Our source of fund generally will be preference. Our source of fund generally will be debt. And sometimes, sir, we may have reserves and surplus also. How much amount? What is the equities proportion, preference proportion, debt proportion, reserves and surplus amount out of the total capital employed? And we will find out the proportion for each. That is equity divided by total capital employed, preference divided by total capital employed, debt divided by total capital employed, reserves and surplus divided by total capital employed will be our proportion. Then we will say individual cost of capital. Individual cost of capital means KE, then KP, then KD and KR, and then we will find out the KO, which is nothing but KE into proportion, KP into proportion, KD into proportion and KR into proportion. We will get the KO, my dear lovable students. But in this question particularly, we don't have any other source of finance like preference, like debt, like reserves and surplus. So in this question, no need to do all these stuffs. So basically KE is equal to KO because this company is a all equity company. For a all equity company, since in the capital structure, no one will be there except equity. So the cost of equity, KE, will be equal to KO. So just I have to find out the KE. KE is nothing but DPS1 divided by MPS0 plus G. But here they have told anything about the growth. They said that our company is going to have a fixed dividend pattern. 27 paise last year we have paid. In the coming year also we will pay only 27 paise. So basically DPS 1 will be 27 paise, 0.27 paise divided by, in order to enjoy this 27 paise in the next year, you have to invest now. How much you have to invest? 1.5 rupees. 1.5. And what is the growth rate? 0. So 27 paise 0.27 divided by 1.5 into 100 means how much percent? 18% is what KE. that is equal to what? KO. That's what given as the answer for the first question, as KE is equal to how much percent? 18 percentage. Look at the way of presentation, what and all they have mentioned. Market value of equity, we all know that. Market value of a firm is equal to market value of equity plus market value of debt. Market value of equity is nothing but number of equity shares into market price per share. What is the per share value of equity share? 1.5. How many shares they are having? 5 lakh. So 5 lakh into 1.5 comes to 7,50,000. Basically, this 7,50,000 should come and sit in the amount column here, equity 7,50,000. And I am going to calculate the market value of debt, which is nothing but nil, because question specifically said that there is no debt. So no other column will be filled here. Automatically the total capital employed will be 7,50,000. So the proportion will be how much percent? 100 percentage. So just I have to find out the individual cost of capital. For that individual cost of capital, cost of equity capital KE is equal to DPS 1 divided by MPS 0. Here we have to apply dividend price approach, not dividend price plus growth approach. Since no growth has been given in the question, that will not work out. So DPS 1 divided by MPS 0 means 27 paise divided by 1.5 rupees. So 0.18, that means 18 percentage is the individual cost of capital. You tell me 18 percentage into 100 percentage comes to? So KE is equal to KO, that is equal to 18 percentage, my dear lovable students. Are you comfortable? So since there is no debt capital, WACC, that is KO, is equal to KE, that is equal to 18 percentage. That's it with regard to question number 1 out of our 7 question. Do this question number 1 and try question number 2 by yourself. Then check the answer with me, not listen to the answer with me. I'm waiting here you to try question number 2 and check your answer with 2, and once you are getting that answer, update me whether you got the right answer or not.